Hello everyone, welcome to another beautiful episode from Jayfx House. Today's episode, I will be breaking down Elliott Wave. Welcome to our official first episode of the Elliott Wave method. Okay, so also just like how we had on the Wyckoff, which we just concluded the series, this series also have an ebook. Okay, so I'm reading from the ebook right now, which is also available for free. The link is in the description of this video. So if you want to get this ebook, you can use the link in the description. You download it, it's free. And it is an ebook that covers basically every aspect of Elliott Wave you need to know on the fundamental basics. Okay, so the link is in the description, is available on our Telegram community. It's over 45 pages, and this will be the table of contents which I'll be using to also break down our mentorship program. Okay, so these episodes will be based off this ebook. So if you're going to be taking this, it's also recommended you get the ebook, and which the link is in the description. Okay, so this is our introduction to Elliott Wave method for you to also have an insight of what Elliott Wave is all about, what we will be going through, and basically the content I'll be providing for you guys under this particular mentorship. So first of all, we have the chapter one, which would be the basic introduction, an overview of the Elliott Wave theory, from the history and what it covers, what it's all about. And then we move over to the introduction to Elliott Wave method, which is where I introduce you guys to the corrective and impulsive patterns. Okay, so I'm going to be breaking that down on these aspects and also the importance of recognizing market cycle on Elliott Wave. Similar as we have market cycles on Wyckoff, we also have the same on Elliott Wave, and it's also important for you to also know these market cycles, which is why I will be introducing them to you guys on this series. So we have the historical background of Elliott Wave as well, which is also available in the ebook, which covers the origins of Elliott Wave, the contribution of the, let's say, founder or the introduce, or what's the word we would use? Let's say the one who put together the concepts of this Elliott Wave pattern in recognizing the market. So his name is also labeled with Elliott, basically where they got the name of the method from. Okay, so his contributions are also available within this ebook, and you can also read about it so you can get a background history of how you can study him if you want to. Okay, so we also have the evolution of the theory in modern day trading, basically explaining how this method has evolved over the years in the aspect of technical analysis, and how you can also implement them on your own trading outside just using these patterns to recognize market structure. Okay, then we move over to chapter three, which covers the understanding of Elliott wave theory, basic market psychology for using wave patterns, because wave pattern deals with Elliott wave. So basically, if you look over here, we have overview of wave theory. So this is basic breakdown of the wave theory, and then we have introduction to Elliott wave method. So the Elliott wave theory is basically covering impulsive and corrective wave, while the wave theory is basically covering the concept of using wave pattern to understand the market. So it's basically the same thing, but there's a psychology behind it that you have to understand to be able to know how to implement these things on technical analysis charts, to be able to predict trend and market reversals, and how these stuffs reflect on our behaviors. Okay, so the Elliott pattern comes in with a lot of emotional understanding, because basically frequencies are emulated in waves, and when we talk about frequencies, we're talking about reactions. So this goes further to understanding how the human emotions reflect also in the market, which is basically what we call sentimental analysis. Okay, so all these are available as well within the ebook of this file, which is available in the description. Okay, so we go into the core principles of Elliott wave patterns and how you can identify them, how you can label them on your own chart, and the correct labeling techniques. So Elliott wave basically has different counting, numbering, let's put it like that, because it's a concept that deals with a lot of numbers. So when you have things like this, and you have this like 1, 2, 3, 4, 5. This is just an example, okay? So when you have things like this, there are anomaly techniques and also different representations of how this can be done in your chart. There are wave patterns where you find a circle on the numbers, and there are wave labels where you find this represented in numeric forms like I. I'm sure you have seen what I'm trying to say in the past before, IV and V. Okay, so these are all different wave patterns, and it doesn't basically have any difference. They are all used to label the chart, but they also have their names. Okay, those things are also available in this ebook. That's what we have on the chapter 5, correct labeling techniques and understanding the degrees and circles of these wave patterns. So we also have application of Elliott Wave in predicting the market, how to align Elliott Wave method with market structure, and how you can basically use this in understanding a new circle in the market. So you have chapter 7, the guide to using the patterns, which is like a step down method, a step to step, method down to how you get it on the lower time frame. Because Elliott Wave is a strategy that covers using multiple syllables and representations. Okay, so you have to basically understand how to do this and how to confirm these wave patterns with other technical methods so you can be able to use it in a modern day market. Elliott Wave was discovered the previous century, but it's kind of like a new system to the modern retail trading market that deals with social media and applications, digital applications. So you have to basically have an insight on how to use these stuffs on a modern day market, because the stocks market have been moving since when this method was invented, and it has evolved over time. So most of the most recommended method of trading right now is the smart money concept. But understanding smart money concept and Elliott Wave can be a very powerful tool which you can use to basically predict the market in a more reliable way and have a more sustainable outcome. So these are all labeled within the ebook, and you also have advanced wave techniques and how you can also integrate Fibonacci tools with Elliott Wave method. So those are also presented within the ebook, and you can also get those breakdowns for free. So the ebook link is in the description, and you can get this while you can. Okay. Um, this is the abstract, official abstract of the ebook. So because of time, and I'm trying to make the videos shorter, so we don't have to stay here for more than 30 minutes. So you can pause the video, go through the abstract, so for you to understand what we have on the ebook, and also an insight to how Elliott Wave method works. Okay, so you can pause this, go through this, have an understanding of what I'm going to be explaining to you, so you make the class easier for yourself. Because for me, I already understand these methods, and I will be representing them to you, so you too can understand this method. So you do yourself favor by also giving yourself insights to what you're about to study. Okay, so we move to chapter 1, Introduction to Elliott Wave Method. So this is the guy I was trying to explain to you guys earlier. So this is one of the original founders, the pioneers. Yes, that was the word I was looking for. So this is the pioneer of the Elliott Wave system of trading that we're using today. Basically, the method we are currently breaking down now. As you all know, we also have Wyckoff's pioneer, which also has the name Wyckoff behind him. So this is the guy that pioneered the Elliott Wave method. And his idea to the market was that the market moves in circles. Circles like when you have representation of waves, when you have market structure. So he believes that these structures move within structures, like how market structures move on lower time frames, and you have representations on higher time frames. So this was basically his concept towards the market. And where you see market moving in an uptrend, it's basically also moving in form of a circle. I mean, a circle that covers time as well. So basically, this is like there's a wave pattern towards how this moves, and understanding these representations and how these waves work using Fibonacci frequencies and sequence. You can also give yourself insight to how you can predict the next moves of the market. So basically, he believes the market moves in wave patterns, and it can give you great insights to understanding not just the market, but also other aspects of life that deals with frequencies. All right. So he believes that these patterns are not basically random, but structured. Basically, what we have as market structure. So he was correct. And traders can identify this pattern to anticipate further movements and how to know the right spots to join in the market and where to leave, basically. So the theory suggests that market flows in a predictable pattern of 5 impulsive waves. This is where we have the wave 1, 2, 3, 4, and 5. On episode 2, we will be breaking down basically what this means. So he believes that this moves in a 5 impulsive wave leg, 1, 2, 3, 4, 5, and also in a corrective wave, a 3 corrective wave leg, which is the A, B, and C. So you have this as A, have this as B, and you have this as C. Okay, so this is kind of like a corrective pattern, and this is an impulsive pattern. So in a retracement, what do you have? Corrective patterns. So 2 and 4 would be a retracement, which is likely supposed to be represented in a corrective projection. So 1, 3, and 5 are basically impulsive wave in the direction of the trend, which happens in a circle of a lower frequency 1, 2, 3, 4, 5. So I'm going to be breaking this down also in further episodes, which will be released in the future, and you would have a much bigger insight to how these patterns work. And also, you can give yourself a head start by getting the ebook. Link is in the description and is available for you for free. And moving on, so you can go make your research about this guy and read a little bit about Elliott Wave method and basically how he saw the market. And you can get an insight to what we're trying to explain to you here. So before we be getting to the chart, where I'll be showing you a practical examples of how to use Elliott Wave in a live market, I want us to go through the fundamental principles and the information about this method. That is why you see us reading the ebook actually. So this is an introduction because I can't be showing you how to identify 1, 2, 3, 4, 5 on the chart while I know that you don't know the meaning of these things and how I actually identify them. So this is a mentorship program for you to understand how this works, not just see me use it, okay? So this is where you have to apply patience and take your time to understand the contents within the video, okay? So this is the introduction to Elliott wave pattern. So as I was explaining earlier, the impulsive waves are also known as motive waves. And then the ABC is known as the corrective waves. So these motive waves are basically shown in the direction of the main trend, while the corrective waves are the reversals or the retracements that come in next. So together, this pattern forms the full projection of the Elliott wave market cycle. So basically, this is known as a single leg, and while it repeats itself as 1, 2, 3, 4, 5, and A, B, C. 1, 2, and on and on and on and on and on. So this is how Elliott wave system works, and it continues. So this is a full circle, and this is known as a full market cycle. As you can see, this is also basically understanding what market structure. So if you look at what we just did right now, using this label, we just identified 3 levels of market structure. What do I mean by that? The green line is like a wave of 1, 2, 3, 4, and then 5. Within this green, we have this blue. As you can see, the blue also identifies the lower time frame structure. And then we also have the 1, the red. 1, 2, 3, 4, 5. So Elliott wave helps you to see structure on multiple time frames, basically by identifying them with these labels and understanding the structures of these patterns, which is impulsive structure or corrective structure. So it doesn't really matter first the labeling, but first the concept. What matters most is understanding the concept. Once you get the understanding of the concept, the label follows. Okay, because these concepts have rules and regulations to how you can identify them. And they also have principles that you have to follow to be correct. Imagine going to look for an impulsive wave and then you're trying to identify it with a corrective label. So you're going to get confused. Now, impulsive waves also happen in a bearish market. We will go into these concepts when we look into an episode that basically focus on corrective waves. So impulsive waves also happen in a bearish market and can also be corrective on a lower time frame. So it's complex, but I don't want to get you all confused. Let's just keep this on an introduction basic level. And as we go on further, we are going to break down these concepts and you would understand how they work. So you can also use them to understand your market perfectly. So moving on, you can see we have these principles also labeled within the ebook. So you can also go get the ebook, or you can pause the screen and read on as we study this together. So basically, I'm helping you study the ebook, how you would normally just read it yourself and get the insights and basically get confused if you're not highly understanding what you're reading. But with my guidance and these episodes of this Elliott Wave Mentorship, you can basically understand how this works and give yourself a better understanding on how to use this market method yourself. So, importance of recognizing market cycle. We're going to just cover this and then the historical background of Elliott Wave method while we leave the chapter 3 and the rest to future episodes. So we're going to just cover chapter 1 and 2 and also basically give you insights to how the cycles of the uptrend and downtrend works. So as you can see, from what I was saying earlier, there are principles that guide this method. And these principles are things you should understand. Because if you don't understand them and you try to identify these labels on the chart, it's going to get confusing for you. So do yourself a favor and get the ebook. You can also print this if you want. Okay, so it's made on a PDF model, but once you download it, it's over 45 pages. You can go to a computer site, get it printed out, keep it as a book, and then study it at your own free time to give you insights to understanding this method better. So the market cycle is essential for identifying wave patterns as well, because it consists of the uptrend, which is the impulsive, or the downtrend, which is the corrective, but also can also be flipped. So when I mean flipped, I mean you can have an uptrend that is impulsive, okay? So this is what we call an uptrend, understanding wave patterns too as well. So this will be one, one, two, three, four, and then five, A, B, C. We have this as one, two, three, four, and then five. And basically the circle continues and it continues till we complete, the circle, which would be the direction of the higher time frame or the market. At the same time, we move on to a downtrend. Let's break down a downtrend. The downtrend will be okay. So this would be one, two, three, four, and then five. And then this would be A, B, and C. One, two, three, four, and then five. So you see, this was what we would call an impulsive bearish market with a corrective bullish retracement. Impulsive bearish market. And this would be an impulsive bullish market, corrective bearish retracement, impulsive bullish market. So as you can see, it goes two ways. And then this would be what we would identify as uh, a bullish circle, and this is a bearish circle. So I did this part slowly so you can also understand what I'm trying to say. Okay, so you have to also understand this is a recording. So you can get the video, retrace it a little bit, understand what I'm trying to say again, watch it over and over again so you can understand what you're learning. But this is how the market predicts its cycle. Now, you might be saying, how does this help you to identify entry and exit mode? Now, if you look at this using smart money concept, this can be seen as liquidity. This can be seen as a demand zone. This can be seen as a break of structure. This can be seen as a mitigation of a QM level. And then if you look at these key levels, you're seeing that these are ending or beginning of a new wave cycle. So this is the beginning of a C and an ending of a retracement, right? Bullish retracement. And then this will be the ending of a impulsive wave, and two will be seen as the ending of a corrective wave, mitigating a QM level, significant level as well. So you see, these key levels can be identified using wave patterns, and we can basically understand how to look for market structure. So I'm making it logical for you to understand. Do you get? So most of the mentorship program you might have had might not be this detailed to understand these levels. This is outside Fibonacci. These are core principles of identifying wave patterns. And these are the basic fundamentals without making things complex. I'm not going to be telling you any fancy words or any fancy stuff that you might not know. So I'm going to be starting from the basic level so you can also get an insight to what I'm going to be explaining to you, and you understand it's logical to use these methods to trade the market or understand the prediction of the trend. So that is what we call market cycle on Elliott Wave, and you can read the ebook for more insights. Moving on to chapter 2, we cover the historical background of Elliott Wave method. The origin of Elliott Wave can be tracked back to the 1930s, where this trader, Mr. Elliott Wave, was actually an accountant and a stock market observer. So he observed that these markets were happening on multiple time frames, and the rhythms, the sequence were basically based off psychological movement of investors. So he noticed that same way we have the fear and greed sentimental analysis, he noticed that the means of which our emotions can be read using tools and technology are similarly to the method of which this market is forming. Okay, so he understood this sequence and then used this to create a pattern based off Elliott Wave. So that's basically why he's called Elliott Wave. So this guy did a lot of investing and also studying, and then he got to this method, which is why we're talking about him today. So he's a very, very, very public figure. I think there's also a statue of him in the US around Wall Street or something like that, if I'm not mistaken. You can also look that up to see how you can learn more about him. So he had a very, very big contributions to understanding the market structure and also the financial markets in general. His concepts gave a lot of rise to many traders using candlesticks and understanding wave, and also giving a chance for trading to prevail in the early 90s. So you can study about him more and do your own research about this guy so you can understand where the origin of these concepts you're using is coming from. Okay, so we have a little bit history of this guy within this ebook, and then you can also learn how he thought the market moved within a wave psychological way, and how he was able to craft that a theory out of this to create this method to this point. Okay, sorry, my dog is I think there's someone at the gates. All right, so moving on, we move to the evolution of Elliott Wave method. This will be where we conclude today's section. And understanding this, since the concept of Elliott Wave came into the market, it has grown over time with the introduction of technology And also, give me a minute, please. Right. And with the introduction of technology and also how time has given the face of the retail market to us, this has been a concept that has developed with so many abilities, okay? And it has been something that many people have used to understand the market in terms of price action, in terms of technical analysis, and also understanding how to predict the market in a retail point of view, okay? So Elliott Wave is a very, 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 very old and interesting method, very logical as well, and can also advance your understanding of what you think about wave patterns and how you can use them. Okay, so you can understand Elliott Wave, and you can implement it in cryptocurrency, you can implement it in Forex, you can implement it in commodities, and whichever market you wish to use. You can learn this and you can get the ebook to also advance your understanding of Elliott Wave method. On the next episode, we will talk about understanding these theories and also how to use this in the market. And then we would also move to technical analysis and also the charts. Okay. So thank you for joining us and see you on the next episode.